Hi, I'm Sophia. I'm working on a business consultancy project for London Metropolitan University. Today I'm with you guys, Frontier Global Consultant Limited. So we're gonna provide the outcome of the consultancy project that we conducted during past few months. We have worked together. So who is Frontier Global Capital, which is fintech company. It provides a digital solution to small payment institutions, and it is known as electronic money institution or e-money institution, we can say that. So it is basically involved in digital payments. So in this complex technological environment, it has to keep up with technology, regulation, compliance, financial performance, and all the challenges. And being a small e-money company, it these challenges can cause big trouble for the company. So we just studied all the challenges and environment in which the business operates. We have studied the macroeconomic and and on top of that, so similarly, the company is facing these challenges. First off, we did study its financial position. We also studied its financial regulation and compliance, which is applicable to this company and to all the companies of this nature in the industry by Financial Conduct Authority that we call FCA. And on top of that, obviously we have to go through the management practices, and we have to see like whether it matches with the industry practices and whether it is beneficial for the business or no. So we did go through all these processes to work out this outcome that we're going to talk today. So, as we see, the company seems profitable. It has gross profit margin. It does have net profit margin as well. But we see that the company was most profitable in 2020, and in 2021, it did hit highest revenue record of 1 million. But and still, if we drill it down to gross profit and move down to net profit, it was pretty low. But what were the reasons behind this low financial performance and profitability? Majorly, the one challenge we discussed was safeguarding account of that company was closed. Because of this, company lost revenue, and strategy to avoid such a situation in future is to we're gonna open various business safeguarding accounts so that we don't lose revenue stream. But on the same side, on the other side, um, safeguarding accounts are expensive. So we will have negotiations with different banks side by side, so that in case if we go out of one account, so we should be having alternative substitute available at the same time, so that we can start it straight away and our business operations are not halted. And on top of that, we did analysis that cost of sales is not a major chunk of revenue portion, but administrative expenses, which are overheads, they take the major chunk of revenue in form of utilities and other stuff. So for this business, this is a major challenge. So we're going to talk about how do we manage these expenses and how do we manage working capital. So to enhance profitability, as we discussed, that we can increase revenue by diversifying customer base and taking preventive measure to avoid loss of revenue in future. And since the business it's a B2B business, and it caters small payment institutions, and they provide money remittance services as well. But banks, high street banks, don't really provide the accounts to them because of the high risk involved with them. So the company is doing a great job in providing these services to those small companies, and it is at its place creating impact and helping economy as well. So to sustain sales in future, it should not only deliver services to small payment institutions, SPI. It should also think of diversifying its business operation to individuals and other corporate customers other than SPIs. So this is going to help diversify revenue, capture new customer base, and it's going to increase revenue. So that's going to ultimately is going to enhance profits. And on the other side, we can try to manage expenses and reduce expenses. And major cost centers in 2022 were research and development, which in long term is a good investment. But if we see 2021 profits went low comparatively as compared to 2021, so to mitigate this effect, during probably we came across eligible R&D expenses, and we have recommended to apply for research and development tax credit. That we're going to help you with that as well. So in that one, for the eligible expenses, we are going to claim 230% of the claimable expense. So this is going to effectively save the tax, and it's going to increase profits. As we see in 2021, we were having higher revenue and higher profits as well, but when we move down to net profit, it went too low just because of after operating income we paid tax. So in 2022 we see that operating profit and net profit is same because we did achieve tax saving and we did not have to pay tax on profits because we did claim tax credit on that. So this was a very reasonable approach, and this can be helpful for other fintech companies as well because they continue research and development, so they should know that they can reclaim these tax credits. Working capital has been managed well because the current ratio is well above 1, so it's 1.14, so 0.14 times more than the company cash flow needs, I understand, but this can be further enhanced as well if we keep the cash in business and utilize that effectively, and on side by side we negotiate. We're gonna negotiate with our vendors credit terms, so this is gonna give us like 30 to 60 days free source of finance effectively, and this is gonna help us manage our working capital. So this is very helpful. On top of that, we are also having very low gearing, which is a good thing, and because the company operates in a high risk environment, so it's a good thing to play safe. But company can obtain consider different sources of finance available in the market, and it can obtain finance and it can use that to diversify the company operations and play at a larger scale rather. So this is another suggestion company should consider. And if we so this was all about financial performance we have discussed. So if we on top of this we also discussed other challenges faced by the company with regulation and compliance. So company has to comply with anti-money laundering regulations and other customer due diligence as imposed by FCA. Because it's a small company, it may lack resources or knowledge to deal with this. But if company invest with leadership development and it subscribes to FCA updates, that can be more helpful. And on top of that, if we talk about management enhancement, so if we talk about management practices, we can see like management is keeping up with current practices. It can further invest in resource development. It can also raise risk awareness at all levels, so that because it's operating in a high risk environment, and it can anytime any action can go against FGC, and you guys can be penalized, or in worst case, if customer due diligence or anti-money laundering was not followed correctly, so company can be penalized, or in worst case it can be, and the license can be cancelled as well. So all staff should develop themselves with continued professional development, and we have spoke about major things that the company is facing, problems and the solutions. So now we are going to just conclude it. Overall, we have discussed the financial performance issues faced by Frontier Global Capital and the other companies which are operating in this sector. So you can implement robust financial analysis techniques, and you can optimize working capital, as we discussed, by obtaining free sources of finance. And we can also think of diversifying income streams rather than sticking to only SPIs. We can have other customers as well, individuals and other organizations. This is gonna help us save revenues and increase revenues as well. Anti-money laundering is a major challenge in this industry because it is highly regulated environment, fintech, EMI. So we have to establish a well-defined anti-money laundering compliance frameworks. This should integrate as according to FCA policies, and it should stay vigilant about changes in anti-money laundering regulations, and how we can do it, as I discussed earlier, that we can subscribe to FCA updates, and on top of that we can implement risk-based approach. We can raise risk awareness in our staff at all levels, so that in case if any situation occurs, they should be aware in advance that what and how they have to report further, so that you are aware of any such situation in advance and take the precautionary measures. Management challenges, obviously, because it's a small organization, having less access to resources and defining operational efficiency, these are difficult challenges. So for company should obviously develop leadership, invest in leadership development, and these leaders can obviously steer the company out of financial difficulties, and company can consider its processes again and implement process improvements, and by reducing the costs, and a company can establish risk management protocols as well, as according to prescribed as prescribed by FCA, and it should also adopt a strategic management approach to setting clear goals, objectives, and then breaking down and to plans, and then achieving it. And its strategy should be customer focused rather than focused on its own self. And to succeed further in the long term, FGC can prioritize customer satisfaction and having long-lasting relationship with customer, and it has to stay in business. It has to embrace innovation, because it's high-tech environment. So overall, it has to keep on evolving and developing by continuous monitoring, adoption, and continuous development for the technology, as well as for the regulation and compliance. And for financial performance, it has to keep up with the suggestions that we shared. Hopefully it's going to help you and other companies in the industry. So thank you so much for your time.